big move today, or is it now perhaps getting a bit ahead of itself?
You know, Sonia, it could happen that perhaps there's some profit taking if there's any in the zone of 15,650 to 15,700, because the bank Nifty perhaps hasn't opened as much as people may have thought it will. X of bank Nifty, I think a lot of stocks doing well. I think the commodities really are doing really well. I think Reliance is leading this move, and you know, for me, really, a couple of stocks stand out. GAIL, for example, Vedanta, Tata Steel, these kind of stocks could be very interesting as the day moves forward. But oil and gas stocks perhaps could well be one of the sectors to watch out for as far as today's trade is concerned. Let's see, Sonia. As I said, 15,650 and 15,700 is where calls have been written. As of now, I don't think they would want to panic. But if you start to cross 15,700, then it's a different ball game altogether. But Mitesh, your thoughts on market opening?
Yeah, see, I think we're trading around the 15,650 mark. So on the index, you know, my stance remains the same. I think, you know, take profits and see if the day's high is crossed, and then, you know, might want to take a long. But on the stock side, I think Reliance has clearly been in highlight for many days now. It's now showing signals of retesting the earlier weekly highs of around 23.25. So I would be a buyer there with a stop below 2,200.
Okay, Mitesh, thanks a lot for those trading ideas, and have a good trading day. Sanjay Mokim is joining us. He's the strategist and head of equity research at JP Morgan India. Sanjay, good morning. Thanks for joining us. Been a roaring bull market, right? It's just ignored everything. All the bad news. It's, you know, a market in which perhaps a lot of people have not been able to even participate. But your thoughts on what next for this market? What's your view?
Good morning, Anand. Always a pleasure to be on. In my mind, there are 2 or 3 things which have helped the market move up higher over the last 2 days. One, of course, is the subsidence of the second wave and the humanitarian crisis the country went through. But the second, and I think a very strong macro driver, has been the weaker dollar and the strength in EM inflows and EM equities themselves. So I think that's been a significant support for the Indian market as well, because we have been arguing and we will continue to argue that the underlying economy may still take time to recover, but the strength in asset prices has a lot to do with the way global macro events are playing out.
Okay, Sanjay, good morning. Thank you for joining us. I just wanted to put one point on the table for our viewers. Finally, if those of you who want to buy PNB Housing can buy, it's not on circuit. It's 6% higher, 737 rupees. And that would be, you know, since the day of the Aditya Puri Carlyle announcement, the market cap of the company has gone up by almost 6,000 crores. So now you know the market value of Aditya Puri in the, as a shareholder member on the board, it is 6,000 crores. I mean, some growth, I must say. Hats off. Like I've always been saying, I saw some of this in the late 90s when UTI Bank was taken over or was headed by PJ Naik. That absolutely changed the fortunes of that bank, and then later on became Axis Bank. So these management changes, governance changes bring so much to the table. Magma FinCorp again has been going 5% every day. I didn't calculate the market cap since the announcement came, but even there has been an exponential growth. Sanjay, you know, my question to you is about the NBFC space. We speak a lot about banks, and I will come to you. But is it time to take notice of NBFCs because strong people are entering that space? Are there more buys, therefore?
So good morning, Lata. We have been saying, and I will insist on this, that the early cycle driver of any cyclical recovery in India, if we are assuming that Indian economy will improve post-COVID, 2022 or thereafter, that has to be through credit and lending growth. Okay? Because you can flip it around and say that, look, if you don't get the credit growth, if you don't get lending going up, then it will be very difficult for the Indian economy to reach those aspirational 7-8% GDP growth rates. And therefore, an investor portfolio should be focused on financials which are able to deliver that growth, whether it be banks, and like large private banks, for example, or if there are select NBFCs which have capability to drive and deliver growth. And so that key word I would emphasize, growth and lending growth is critical. And to your question then, Lata, you would not basket buy NBFCs as a class, but think of bottom-up companies which have, drivers of growth which are strong enough in certain verticals, to be able to execute on that. So yes, financials make a lot of sense to us, but even within that, you've got to pick the executives.
Okay, but you know, Sanjay, again, I'm delving back to the past. If you remember 2003, 2004, I assume you were around trading in the equity market at that time, and I was reporting. You know, the banks took a long time actually to show it in their EPS because credit growth doesn't come quickly. Look at every Indian large conglomerate group, they are deleveraging. And the biggest pain for HDFC Bank, you can speak to the management, they'll say our biggest problem is repayment and prepayment. So if volume is not there and margins are under pressure for obvious reasons, you know, interest rates can't fall any further, and if there are no takers, you can't raise rates, then is the EPS growth going to be postponed? It will come, but it's not this year.
No, so you're right. There will be two dynamics that play out to my mind. One will be pressure on net interest margin for banks, because one of the preconditions for delivering the growth, as you were highlighting, Lata, is sacrifice on yields of the asset. You've got to push the credit to the market, and that may require cutting interest rates, lending at lower rates, for example, and that should logically be negative for NIMs for the whole financial space, to my mind. However, and we've been highlighting this for some time, the banking stocks in themselves are actually more growth instruments. Whereas globally, you think of banks as value stocks and they move up and down the yields and so on. In India, bank stocks are largely growth instruments. So if you start to see top line momentum, and you know, I can talk about why I think that may happen. Even if NIMs come under pressure, I think the stocks will still do that. And to your earlier point, Lata, that you know who will borrow, my only submission is that we have to think of lending growth as a top-down macro phenomena and not try to count the list of borrowers in the country. India is too big for us to be able to do that.
Okay, got that. Sanjay, hi, good morning. So let's come back to themes now. For the rest of this calendar year, where are you placing your big bets on?
So morning, Sonia. We have two or three things we are saying very distinctly. In the near term, we expect the domestic consumer-facing companies to go through a soft patch. Now, this could be discretionary, it could be autos, it could be staples as categories. And the reasons for this are fairly obvious. Most companies will struggle with slower top line, the effects of the lockdown, the effects of the second wave, for example. And we've heard this in conversation during the results season that's just concluded. And these companies will also grapple with continued margin pressure. So juxtaposed to very high growth expectations, at least for the next 2 quarters, you're going to see under-delivery from the domestic B2C sort of companies. And that's a pocket that we remain a little bit cautious on at this moment. And if you're not buying the India growth story for a short-term investing horizon, you are therefore forced to look at the non-India stories, which is, let's say, IT, pharma, and I would stick in the banks in there as well, because I don't think there are too many financial earnings, at least in India.
Okay, by the way, the market's now inching higher and higher. Reliance is leading this move now, just a big move on that stock. And in the broader market, Muthoot Finance is making a big move, 4% higher. There's a big move happening now in Sun TV, Titan, a lot of these stocks doing well, and a couple of these real estate stocks also doing well. Sanjay, real estate as a pocket, do you invest here? A lot of people believe there's a lot of value here. Would you agree?
So yes, Anuj, that's been a theme that we've been highlighting for some time as well. And it again ties up to our premise that liquidity is ample and rates are falling. And if you go to the earlier debate we were having on lending growth, one of the easier avenues to lend for all banks in the country is to mortgages. Right? And we've seen, if you look at 2020 data, mortgages is essentially all that banks have lent to during the pandemic. And our sense is that that momentum continues. It will be a catalyst for home sales, home construction, home buying. And if you flip it the other way around, you've got very little to do with your money. Your post-tax rates on fixed deposits are very low. Equity markets appear elevated. People need to deploy the cash, and it's probably going to end up in hard assets such as real estate. That's the theme that we think will continue to work for quite some time.
Okay. By the way, a lot of consumption companies are hitting fresh 52-week highs now. Just look at Titan. That one is up almost 4%, has hit a fresh high. Maybe as you know, the economy is opening up, several places are easing their restrictions, perhaps demand could come back. Marico is another one, by the way, that's hit a fresh 52-week high right now. Talking about consumption, retail, I also wanted your thoughts, Sanjay, on autos, because it's been a stellar run that many of these autos and auto ancillaries have seen up until now. But the commentary is a bit confusing. I mean, as are the sales trends. What is your take on it?
So for the category, Sonia, I think the near couple of quarters are likely to be challenging. And this is in communication, the companies are suggesting that there may be some trouble near term. But if you are a medium-term investor, if you look at, let's say, June 22 or December 22, for example, then the biggest driver of the cyclical recovery, as I've been talking about, is the lending revival and is the fact that real interest rates and lending rates are very low in the country. And autos are a very big wage-sensitive sector. If you take the last 20 years of data, the decline in interest rates has almost always led to increased auto volumes for four-wheelers, two-wheelers, and commercial vehicles. So there is hope. Yes, the sector may be going through some stress now, and we are practically underweight on the space for now. But there is that medium-term hope that the lower rates will drive auto volumes up eventually.
Okay, fair point. Bank Nifty is now pulling up some weight, and a couple of other stocks like Tata Motors also looking quite interesting right now. On the downside, of course, there's Motherson Sumi and Bharat Forge both down a bit. Sanjay, in the healthcare space, there's been some new themes emerging like diagnostics. Of course, hospitals have done well. The API space has been a rank outperformer. What's your view here, and what kind of sub pockets are you investing in right now?
So look, my pitch on healthcare, Anuj, is that this is not to be treated like a basket. This is a very, very bottom-up sector because the fortunes of every company depends on its specific pipelines, specific plants and approvals and all the complications that go along with the industry. So yes, I mean, people want to look at it as a theme, but I don't think it classifies as such. There are a few stocks that we like as a house. I can't talk about it here, but I would argue that this needs to be approached very piecemeal and not as a thematic, in my opinion.
Okay, well, actually, Anuj took away my question. I was thinking of that. Since healthcare and pharma are going to be such important preoccupation for any society for some time now, maybe it would be a good idea, I thought, to buy the top pharma stocks. Would that be a way to go, or you would still go only bottom up?
So I would argue, Lata, that look, yes, the requirement for healthcare is structurally very high in the country. But the ability of the companies to leverage that and make money off it depends on specific circumstances. So, like I can bucket financials to saying that all will benefit when lending goes up, I can't say the same for the pharma space because it's very specialized. And therefore, you must know which company is making what product to what customer.
Okay.
I caution against big thematic.
Okay. Well, I just want a final question, Sanjay, on the way in which the market has been going, despite a lot of adverse news for the economy. The economy is also headed higher. Definitely, second quarter will be better than the first quarter. And, hopefully, if there isn't a killer third wave, the third and the fourth quarter will also be better than the first half. But even then, the market is already priced in a lot, isn't it? Do you have the courage to buy at these levels, at 16,000 levels? Or do you think you can buy, but the wait will be very long for returns?
So look, fundamentally on a DCF, there is very little upside. We've written notes saying that the implied cost of equity has fallen quite a lot. We are not by any stretch in any comfortable territory on valuations. And the only reason India sustains at all-time high multiples is because global equities are also at all-time high. So it is only relative to the rest of the world that we are at average. On absolute terms, this is not a comfortable valuation zone by a mile. The risk to investing now is external. So if you do see corrections in the S&P 500, either because the market fears inflation or yield increases, the Indian market will also take it.
Okay. All right. Yeah, that's right. Externally, anything, then we are entirely dependent on the export markets, even in an economy sense, and therefore anything bad can be significantly impact us. Yesterday's trade deficit numbers were telling. Exports have grown 8% over even 2019 levels. Forget 20. But imports are 25% below May 19 levels. I mean, that shows how bad is the domestic industry. Thank you very much, Ajay Bokhe. We'll carry on the conversation later.
Pleasure.
Okay, well, I just wanted to point out that in the meanwhile, Punjab National PNB Housing has once again gone back to circuit. So you had a chance of buying it for perhaps about 5-10 minutes, and then the circuit comes up again. So perhaps more steps to climb. Well, let's get to one stock which I think for the past 3 decades has never gone away from the limelight, one of the most colorful stocks, and that's Asian Paints. Joining us now is the managing director of the company, Mr. Singhal, Amit Singhal. Thank you very much, Mr. Singhal. A pleasure having you with us. Well,